primary focus is going to be receiving the inventory and seeing how we calculate the inventory, okay? So everything that we learned from yesterday, whether it's making the purchase, this is going to add on to the situation. So this is going to be the other side. So when we have the journal, we're going to have what's called an inventory worksheet, where we actually the more we receive the inventory, the more that we're calculating and piling them on top. So let's go ahead and look at periodic inventory, because it will look a lot different than your normal inventory. Okay. So first off, we're going to talk about costing methods. Okay. So costing methods is when you calculate how much items after gathering all the costs of the inventory and asset, right? You've included the shipping, you included the sales tax, you included everything to get the inventory items to your inventory. To the inventory worksheet, right? Once you dump it in there, you're going to start calculating the per unit basis, or also known as cost of goods sold, all right? So, but in this case, when we're looking at periodic, we're going to be looking at, our main focus is going to be three areas, okay? So 3 different ways that we can cost our inventory. Okay, so we have FIFO, which is first in, first out. We have LIFO, which is last in, first out. And then we're also going to be looking at weighted average, okay? And each one is going to be slightly different. And then the last one that we don't teach in this class just because it's just a little advanced, and plus it's kind of, I guess, something that I don't think it's as widely used as weighted average. But it's called specific ID, and I'll talk about each one in a minute. So first in, first out, right? The perfect example I can think of is a grocery store, right? You sell produce. The bad thing about produce is it's a perishable good, meaning your first batch that you buy has to be the first batch that you sell, okay? And that's exactly what first in and first out means. When you buy a batch of inventory, you generally want to sell the first batch that you purchase and sell those out first, okay? You can also apply that to selling milk, right? Every product has an expiration date. So the life and the shelf life of it doesn't really last long. So you have to sell the first batch that you purchase, okay? And that is first in, first out. Last in, first out, right? That one can be applied for most companies that are in the works of electronics, right? Cell phone companies, hardware stores, right? Even electronic stores. Because usually the latest model is usually the first to go, because obviously everyone's very hyped up about the latest model. Everyone wants the latest and the greatest. So for that example, you're more likely to sell out a brand new product versus your older models. But your older models are still selling. So that's why it's last in, first out, because your latest and the most brand new things that you released or purchased very last will be the first to sell out. Okay? I'm trying to think of some kind of way that also applies to the grocery store. I would say household products, right? Even though they do have expiration dates, oftentimes when they shelf it, they usually shelf it. They just shove the shelf up there, right? They don't actually check the expiration dates for household products, right? So for example, candles, all those things. So sometimes they'll even put the new packages or the newer things, and they usually put it in the front versus all the older stuff are in the back. So I guess that could be an example of LIFO, which is first, last in, or first to go. Okay. So again, the last batch that you purchase is going to be the first purchase that you sell. First batch that you sell. Right. Weighted average. Okay, so this is where you have a specific item. Am I recording this? I don't think I am. Hold on, let me check real quick. Yes, I am. Okay, perfect. Good. So going back to this idea, where last in, going back into weighted average is basically going to be when you have a product that you buy oftentimes and you don't really care, or you don't if it's too high this day and then the next day it's too low, you want to take an average cost for it. So for example, water. Okay, water is a resource. It's a source that everyone needs. So you can't really market your water at a super high price, but it doesn't matter whether you sell the first batch or the second batch, right? Usually, oftentimes, whatever's out in the store, right? They pull all the batches out. Whatever sells. So that's going to be an example of where you don't really care too much about how to cost it, and instead of costing it based on a high price or a low price, you're going to cost it as an even number, and that it's going to be a stable a stable, a constant flow of basically the costing method. It's just a constant flow. You're gonna take the grand number of how many items that you have, and you're going to divide it by the total cost, which is going to give you an average per unit. So this one is for things that are are necessities, and you don't care for charging either a higher price or a lower price for. Everything's just constant, and you're taking the average. Okay. Lastly, specific ID, which again we don't teach in this class, but what it does entail is it's going to be when you sell items, obviously you're gonna have a serial number or some kind of like special coding for that specific part. And a perfect example is going to be an auto repair shop, right? Not one item can fit for every single car, right? You need to buy, if it's an aftermarket product, let's say you have, you want to fix up a Mustang, you need to buy the specific part, right? It's got to be a specific water pump for this specific model, for this specific year, for this, you understand what I mean, right? There's a lot of aspects where not one item can apply to all. It has to be geared towards a specific piece. Okay, that's what specific ID is. And I don't care too much to really teach you that one as much, just because that's kind of like on a item per item basis, where the first three costing items or costing methods can really apply towards actual real life objects. Okay. Any questions between all of these? Because we're only going to be focusing on each one every day. So today we're going to be focusing on first in, first out. Tomorrow's going to be last in, first out. Thursday's going to be weighted average. And we're going to get to see all three of them and differentiate them on Monday. No? Okay, then I guess we could go forth. All right, first in, first out method. All right, so when we're looking in at our first in, first out method, there are a few things that you should understand as far as formulas that you have to memorize, or kind of they're easy to understand, especially when you're dealing with inventory, right? So the first one's going to be purchase price, which we have calculated before. It's going to be your quantity times your unit price, okay? And oftentimes, that's going to give you your purchase price, all right? Total cost is going to be your purchase price plus your freight. And again, for the sake of this class, we are only strictly looking at freight, freight expense, okay? So we have total cost is going to be your purchase price plus your freight expense. Okay. Then we're going to be looking at cost per item. So cost per item is going to be your total cost divided by quantity. All right, and that's going to give you the total the cost per item. So all of these are pretty straightforward as far as understanding how to calculate a cost per how to calculate your inventory. Okay. Other extra formulas, which once we see what the worksheet looks like, so if you guys downloaded chapter 5.3 exercise, which we'll get into after this, you're gonna see that it's a pretty decent chart. You have your top part's going to be your inventory portion, and the bottom part is where these two formulas come from. Now, the cost of goods available is going to be your beginning inventory plus your total purchases, okay? And that's going to be how much goods you have available. Now, this will make sense once we dive into our example, but goods available, right, is pretty much a total of how much items you have available to sell, okay? That's all that is, right? And then we're going to be looking at cost of goods sold. Cost of goods sold is going to be your goods available minus your ending balance. And when we're doing our periodic inventory, we will always know what our ending balance is because we need someone to go down to the basement and take a physical count. So that is those components will always be given to you. It's your ending balance. And that's how you're going to solve for your cost of goods sold. So by me talking about these formulas, it doesn't make any sense right now, but it will when we apply it to our inventory worksheet. So let's go ahead and dive right in. Okay. So here I have a little scenario, I should say. And here we're going to be looking at a few things, okay? So let's go ahead and look into this. So on June 1st, you made a purchase of 100 toys for $1.25 each, and freight was $25. Okay? So let's go ahead and practice. How do we journalize that? Okay? So what do we do here?
Okay, we put in the date first, and then in the description, we do purchase expense.
Okay, good. Purchase expense.
And then we times the, let's see, where's my calculator? Okay, then we do $1.25 times 100,
Uh-huh.
which is $125 in the debit section.
Uh-huh.
And then we add the freight expense underneath the purchase expense.
Good.
And we put that under debit as well, $25.
Uh-huh. Now, this is assuming, I keep forgetting I need to put that, but this is assuming that everything is going to be on account. So everything's going to be accounts payable.
Right. And then we have under accounts payable, that credit will be $150.
Perfect. And that is exactly how you journalize this transaction. So here, we're journalizing that we received our inventory, and okay, and we've already calculated how much this stuff is worth. Now, when we move into actually doing this exact problem in our class in-class project. So when we move into Coffee Cafe, you do have a choice. You can journalize first, or you could go to your inventory worksheet for it first. Okay, as long as you journalize that you receive the inventory, and this is how much it's going to when you record what you have, which is purchase expense, freight expense, and whatever that you have, accounts payable. Okay, so here you've already pre-solved that it's going to be for a total of 150. Now, when I move it into a inventory worksheet, okay, so I have here right there at the top, I said June 1st, you purchased 100 toys at 125. Here, when we transfer it into our inventory worksheet, we're going to fill in the date, okay? We're going to fill in the first thing, which is our quantity. And then we know that's 100 for quantity. Then we're going to look at unit price, which was for $1.25. And we know that freight was 25. So to solve for purchase price, which was quantity times the unit price, which gives you a total of 125. Okay? Now, we're going to be looking at solving for the total cost. The total cost is going to be your purchase price plus your freight, which is 25, which we get a grand total of 150, which is exactly how we journalized it. But in this case, instead of calculating it beforehand, you can eliminate 2 extra steps by going ahead and calculating it here first and then entering it into your journal. Okay? But for the sake of this class, I'm going to have you guys practice journalizing first and then solve for the numbers later. Okay? So, you can have just purchase expense, freight expense, and accounts payable. Solve for whatever it is in your inventory worksheet and then copy the information into your journal. All right? So here I just was talking about everything up to the total cost, which matches our journal 100%. Now the next thing I'm going to talk about is having a cost per item. Okay, and a cost per item is you're going to take your total cost, which is here is going to be 150, and you're going to divide it by the total quantity, which is 100, and it's going to give you now $1.50 per item. Now that means when you sell your item, not only are you covering how much it originally cost, you're also covering how much the freight expense was for. So this right here is going to be reflecting of every single cost applied to get the asset to your door. And you're making sure that when you sell your item, you're covering all of those costs. Now, I've seen where freight is completely separated and is considered a complete business expense. Now, yes, you can calculate it that way, and that way, when you sell your item, it's going to be for $1.25 because that's what you originally purchased for them, and the freight was different. But in this case, why should I pay for shipping when I can just add it to the cost of how much I originally purchased for and sell it that way so I can make sure that I make a profit because I'm covering all of the costs that it took for me to purchase the item. So in this case, you can look at it in one or two ways. You can either choose to include the freight or you could choose to have freight as a separate entity. For this class, I will require you to add inventory together. I mean, the freight cost together. I want you to add every single cost together and make it, and instead of, when we sell it, I want you to make sure that you make a price that can cover every single cost it took for you to have the asset into the inventory. Okay, so in this case, every time I sell this very first item, I'm going to make sure I calculate it at 150 to cover the cost it took to ship those items to me. Okay? Any questions to how I calculated this or why I calculated this? Lynette, did you have a question? Okay, so this is now why, okay, let's go ahead and proceed to the next one and it will gradually make sense as we go through each scenario. So the next scenario says that you, okay, I didn't even put the scenario in there. So the next scenario, right, is that on June 11th, you made another purchase of 100 toys at $1.28 each, and freight was 26. Okay, so let me go ahead and skip forward. So that is exactly what this is, right? So since it was for 100, it's $1.28. And it was for 100 items. Okay, so my purchase expense should be 128 plus my freight expense, which was for 26, to give me a grand total of 154. Right? Now I'm going to go ahead and plug that into my my inventory worksheet, and I'm going to have 100 items times 128 equals 128. $1.28. Now it's 128 plus $26 of freight to get me a grand total of 154. And then I cost the items per. I make the cost per item, which is your total cost divided by your total quantity to get $1.54. Now in this scenario, we're going to be totaling up how much our purchases was. And in this case, I've totaled up that I should have 200 items available and that I for the total of $253 plus $51 of freight, which should give me a grand total of $304. Now, because we are looking at FIFO, first in are the first out, it is very, very crucial that when you calculate each batch that you purchase, that you keep it separate. So here, by recognizing how I was able to plug it into this table, at least I've been able to recognize that my first batch that I've purchased, right, the total cost for it is $1.50, okay? And then my second batch that I've purchased, I've already calculated to the point where it's $1.54. Now, if I have one price, okay, if I were to make this $5 even, right? I could tell if I were to sell my first batch, I'm going to make a bigger profit by 4 cents per item I sell. If I were to do the second one first, I'm going to get less of a profit, okay? Because it costs me 4 cents more to be able to purchase that item. So that's just what we're going to be looking into. That is exactly how we're going to cost out the items that we're selling. So here we made sure that we have our total purchases, right? And we understand that we have 2 batches. We have the first batch for $1.50 and the second batch for $1.54. Okay, and this is typically the calculations here are going to so the black arrows, those numbers that you've calculated are going to apply into the bottom half of the table, and this is what it will look like. Okay, so here we recognize that when we're going to calculate our actual purchases, we recognize that we purchase a total of 200 items, which cost us $253, which is going to be exactly where we've had what we calculated in the previous table, right? Now, there is a section for the returns and allowances, which we will actually look into when we apply everything on Monday. Okay, so we're going to have a few returns, and we're going to apply it and see how it affects our inventory. So once you've done that, the next step is to just calculate going down this table. So our subtotal is going to be for 200 items at the same price for 253. We're going to add our freight together, which freight isn't an inventory item. It doesn't affect quantity, but it does affect the cost. So by adding $51, then your total net purchases is going to be for $200 at a total of $304. Okay, and those are the things that we've calculated from the previous table. So once we've solved for the previous table, all we're doing is we're just placing all those calculations inside the second half of the table. Okay, and then lastly, we're going to be talking to that one equation I was talking to you guys about, right? The total goods available, right? If we had beginning inventory, which we will look into an example right after this example, right? If we have beginning inventory, it's definitely going to increase the total amount of goods available. But in this case, we're just starting fresh, so we do not have a beginning inventory. So what you're going to do is the calculated number that you have for net purchases, you're going to bring that down. And then to calculate the goods available is going to be you're going to add the beginning inventory plus you're going to add your net purchases to get your grand total of goods available. But in this case, we have 0, and we'll talk about it when we move into the second example. Okay? So here I have a total of 200 items available at $304. Now, in this scenario, I did mention that on June 15th, you had a total of 80 toys left in inventory. Okay? So that's telling you right here that someone went down to the basement, the warehouse, whatever it is, and they took a physical count of how many items you actually have left in inventory. And in this case, they said that they had 80 items available, meaning that that's how much I have physically on hand. And when I understand that, then the next question I'm going to ask you is, how many items did you sell? Okay? And it's pretty straightforward. If you started with 200 items and you have 80 items left, then to calculate the cost of goods sold would just be finding the difference between the two. And that is exactly what the question is. So I originally started with 200. I'm going to subtract my 80, which is my ending inventory, and I'm going to get that I sold 120 items. Okay? Now, I'll talk about that later. Yes, so you should have 125 items sold. Okay? And that's going to also apply when we are calculating our total cost, okay? So you do have a choice in regards to understanding this method, okay? When we're looking at our total cost, we need to calculate how much it costs you to sell a total of 120 items. Okay, so that's where we're going to go ahead and look at our inventory, right? We have 2 batches. Remember, we have the first batch, which was for $1.50, and then our second batch, which is going to be for $1.54. Now, By understanding that we are focusing on the first batch, first in are usually the first one that we sell, we're going to focus primarily on our first batch, which was for $1.50. Now, I only have 100 items available in my first batch. So if I were to just calculate 100 times $1.50, right, which I already have the calculation for that, it's for the whole batch. Okay, so I'm taking my whole entire 150. That's going to be all gone. All right? Now, I still sold 120. I've only sold 100. I still got 20 left. So then you're going to take that from our second batch. Okay? So now that we've got rid of our first batch, we need to calculate how much it took us to sell 20 items from our second batch. And in this case, we're going to take our total quantity of the items that we sold, and we're going to multiply it by the cost per item, which is in this case, because we're looking at our second batch, we're going to calculate $1.54, which is going to give us a total of $30.80. And what I'm going to do is I'm going to combine those two, because this is the items that we sold, right? When I combine the two, 150 plus $30.80, you're going to get a grand total of your cost of goods sold to equal $180.80. Okay? All right? Once we reach that point, then it's pretty straightforward to solve ending inventory, right? If you have the total quantity of $304 and you've sold 180 from that, then you can easily calculate this number right here, which is going to be 304 minus 180 80, and you're going to get a total of 123.20. Now, there are shortcuts to this as well. If you took the alternative way of doing this, since you already know that you have your ending inventory as 80, right? So scenario 1 is we took in our cost of goods sold, we calculate it down to its 120 items, right? And we found out that it cost me 180.80. And now to find ending inventory, it's going to be your goods available, subtract your cost of goods sold. Now, I'm gonna review a second way of solving this is by looking at ending inventory. We know that we have 80 at the end of the day. Understanding how Fifo works, meaning is you should already know that your first batch that you purchased is going to be gone. You already know that, right? Just by understanding Fifo. So you know at the end of the day, when you have ending inventory, it's going to be from the bottom. It's going to be from the last batch that you have. So you could just take 80 and multiply it by 154, and you're going to get the same answer of 123.20. And then you would, vice versa. You would be able to solve for cost of goods sold there. Now, again, it's personal preference on where you want to start first, whether you want to solve for cost of goods sold or if you want to solve for ending inventory. It's whatever you think calculating the easiest is going to be. Now, understanding how to calculate it is also another concept on its own. If you're going to do the cost of goods sold, you got to think about it this way. If I'm learning how to do FIFO, if I'm going to calculate my cost of goods sold, I'm going to start from top to bottom. Okay? Think of it that way. The top is going to be the first one. The bottom is going to be my last batch. All right? But if I'm looking at ending inventory, I know my top is going to be gone. So therefore, I'm only looking at the bottom. Okay? All right? Now that's a lot of concepts I just threw at you guys just now, all right? Whichever one makes the most sense to you is going to be the one that you're going to calculate, all right? Any questions on anything I talked about as far as FIFO?
No, client.
Okay.
Point of clarification.
Yes.
Based on this example that you were showing, so we have to dispose or liquid, sell first, the one that's lower price?
No, because we are looking at FIFO. FIFO means first batch in, or the first batch to be sold first. Okay, so first in, first out. So in this case, when we're looking at our inventory here, we have two batches, right? Batch number 1 is going to be for $1.50. Batch number 2 is going to be for $1.54. Now, this isn't choosing which one is lower. This one is understanding the concept that we're going to sell the first batch that we've received, okay? So in this case, if I apply this to milk, right? I'm not going to choose from the latest one to sell because then the first batch I've sold is going to spoil. So think of it that way. I need to get rid of the milk I purchased from the first batch. I have to. Why? Expiration date. I cannot sell my second batch first because then my first batch is going to spoil. All right? So by calculating it that way, you're going to sell out your first batch of milk and then you're going to dip into the second batch of milk. Okay?
I got it. Thank you.
All right. So I'm going to go ahead and say, notice this. So what your inventory worksheet's going to look like is you're going to notice that the first batch that you have is gone. And the second batch that you purchase is going to remain in your inventory. Okay? Because that is considered ending inventory. Here at the bottom is going to show you how to calculate your cost of goods sold, right? We started off with our first 100 items for $1.50, which we already know. It's the whole batch. You don't need to calculate that. And we took out 20 items because we need a total of 120 because we sold it. We recognize that it was for $1.54 and we calculate it for $30.80 and we get a total of $180.80. Okay? So this is looking at the top one is going to be looking at ending inventory. The bottom is going to be looking at cost of goods sold. Okay? Either way, no matter where you're at, you're going to subtract it from your goods available and you should get an even number. Always. Okay? You're never going to calculate you're never going to calculate both of them and place it in there because, again, we're dealing with inventory and, of course, inventory, right? You can definitely, when we're looking at weighted average, you can definitely guarantee that every time we sell an item or we cost an item, it's not going to be a very round number. It could be 1.543826, right? It could be a lot longer, but in reality, you can never ever have 1/1000th of a penny, right? You would have to either choose one or the other, which is to round early, meaning when you figure out your cost per item, you're gonna round it from there. And once you do that, your items that you sell will be rounded. So once you've done that, your items will be rounded and it could affect your inventory in a different way. Now, obviously if you're calculating with a rounded number, it does pan out to be even at the end of the day. So don't freak out, because how I explained, if you round too early, you could potentially hurt yourself as far as calculating the cost per item. You're not going to get a super accurate number, right? If you leave the actual calculation, and we'll actually take a look at it when we dive into the example. If we were to not round it, right, you're gonna get a precise number. Okay, so it's, especially if you're selling thousands and thousands of items, every penny counts. Every thousandth of a penny counts. So if you were to round off too early, again, you could hurt yourself by losing. If you sold 1,000 items, you lost $1 right there in a sense of profit because you could have rounded too early. But that's another topic that we could save for another day. But in this case, here we solved is going to be for the 120, or you choose to solve for the 80. Okay, and they come out perfectly even. Okay. So now we're going to be looking. So any questions in regards to the calculation here? No. Okay. Now, one thing that I believe I forgot to mention is all of these that you're calculating right now only happens at the end of a given period. Okay? So in this case, we ended our period in the middle of the month, right? We ended on June 15th because someone went down to the basement and decided to get a physical count. And they told you that there's 80 items available on hand. Meaning that we're trying to close up or wrap up or kind of wrap up the books. So in this case, periodic inventory needs to have an adjustment entry. Okay, so here's our first adjustment entry that we're going to be looking at. All right, and it's called the periodic inventory conversion entry. All right, so again, when we actually calculate this cost of goods sold and our ending inventory, we have reached the end of the period. Okay, you don't do this every day. The only thing that you're going to be doing is you're going to record all of the purchases that happened, but you don't calculate the cost of goods sold until the very end. All right. So when we reach to the end of our period, we need to do the conversion process, which means we're going to take our purchase expense and we're going to convert them into inventory. So that's essentially, pretty self-explanatory of what a conversion entry does, right? It's converting your expense into inventory. And if you guys remember what I talked about yesterday is when we're looking at periodic versus perpetual. Periodic, we're recording it as an expense. But at the end of the period, what's going to happen is you're going to convert it into an asset, which is, inventory. Whereas on a perpetual standpoint, you're just going to record it straight in as inventory. Okay? So here, for our periodic inventory, we're reaching the second step to finally convert our expense into inventory. And things that you're going to commonly see is obviously inventory. Whatever specific item you have, make sure that you indicate it and don't just put inventory, right? If you think about it like this. I'm a grocery store. I sell apples, bananas, and I sell peaches. Okay? You think I'm going to just dump everything in inventory? I mean, I can. I could just go ahead and throw everything into inventory. But you definitely want to be specific when you dump things into inventory. You want to categorize it being inventory apples, inventory bananas, inventory oranges, inventory peaches, whatever, right? Because then you can specifically calculate each cost. Maybe apples this season are more expensive than bananas. So you don't want to just shove everything in inventory and call it a day. It's best to organize your ideas and your thoughts, because then at the end of the day, when you actually do calculate ending inventory, you know precisely which amount belongs to which item. Okay, instead of just saying, "Oh, I don't know. I calculated it, and I'm at the end of the day, my inventory is going to cost me all of this." I mean, you can do that, but it's tricky to calculate, is what I'm trying to say. Anyways, coming back to this, so when we're looking at the inventory, you're going to convert from an expense to an inventory. So here I'm going to journalize inventory because I am gaining my ending inventory, right? For the remaining 80 toys that I've had, I'm finally taking it out of an expense and I'm going to add it towards my inventory, right? But, however, if I'm looking at it in this standpoint, I still have to also zero out my purchase expense and my freight expense, right? In this case, because I made a purchase expense and I add up the totals, right? I'm going to have a total of 200 total of purchase expenses and total freight of $51. So, but what I'm trying to say is I no longer have 200 items in my inventory. I have only 80. So that is exactly why you also need to include your cost of goods sold. Okay? Because you no longer have those items anymore. You sold them. Okay? So this is when we're converting our expenses into inventory. We're looking at how many items we have available in inventory, and we're looking at how many we've actually sold to equal the total amount of what we originally purchased for. Okay? So by understanding that concept, now we're going to look at where we're going to take these numbers from. So again, I purchased toys. So I'm going to be specific and I'm going to dump my inventory item in toys. So since I recognize I had 80 toys left from our little table here, I know that those 80 toys is going to cost me $123.20. So boom, there it is right there. And for my cost of goods sold, I already solved it to be $180.80, right? Because we sold 120 items. So therefore, it cost me $180.80. Now, my total purchase expense, right? We've calculated it in the table before that, which we had it above here under net purchases. I know that I made a total purchase of $253. Okay? And I know that my total freight for that entire thing was $51. So I can go ahead and put those there in those exact categories right here. So I put under purchase expense as $253 and my total freight expense was $51. At the end of the day, your total debits equals your total credits. And what this does is you're zeroing out what your original purchase was and you're converting it into inventory and your cost of goods sold. All right? Any questions on how to journalize this or why are we journalizing this?
No.
Okay? When we dive into our actual worksheet, it will make a lot more sense. Okay? So this is what happens at the end of the period. So from knowing that I have 80 toys available and I have sold 120. Okay? Now, what's going to happen is now that if I continue on with my inventory, I have a beginning inventory. So in this case, on June 15th, we had ending inventory of 80 items, which was true, and it cost you $123.20, right? So what's going to happen is now that you have beginning inventory, you need to add it to all of your purchases, all right? So in this case, we know that we have ending inventory. We have a beginning inventory now because we're starting a new period. So your ending inventory ended up becoming your beginning inventory. So once we've done that, then the next scenario says on June 18th, you made a purchase of 100 toys at $1.27 and freight was $25. We've also recognized that on June 23rd, wow, 23rd, I put third. You also made a second purchase of another 100 toys at $1.30. Freight was $26. And at the end of the period, which here we're going to call it June 30th, you have a new total of 60 toys left in inventory on hand. All right? So now looking at the second scenario, let's go ahead and break down each one. So here's your table with the beginning inventory, right? So here we recognize the 18th and the 20th. We both purchased 100 items. One was $127, one was one for $130. Okay? Here we calculated our purchases, our purchase price, which is $127 and $130. Then we move on to looking at our freight expense. So we have one for $25 and one for $26. So by calculating the total of each one, I have $152 and $156, which if I calculate the cost per item, it's going for every item I sell here, it's going to only be for $1.52, and this one's going to be for $1.56. All right, I calculated the totals at the bottom. Right here, I have a total of 200, and I have a total of 257 for my total purchases. My total freight was $51 again, and then here I have the total for $308. Okay, so this is after we've solved for the second portion for the inventory worksheet. All right, so now we're going to apply it to the bottom half again, and this time we have a beginning inventory, right? And to calculate the beginning inventory is, once you solve for your net purchases, right? You're going to calculate that you have beginning inventory, which in this case, we had 80 items for $1.23.20, which is equivalent to $1.54. And we're going to add together what we our net purchases, which is the new items that we purchased afterwards, okay? Which gives us a grand total of 280 items available to sell. And we're going to add the $123.20 plus the $308 to give us a grand total of $431.20. Okay, so these are our goods available. This is us looking at beginning inventory, and now we're adding these two together. Okay, so when we actually calculate our items that we sold, we're going to recognize that we have a total of 280 items to sell. All right, and then we are still going to be following the same guidelines and rules for FIFO, which meaning we do need to still calculate our first batches all the way. We're going to sell our first batches, okay? In this case, because I have remaining or leftover inventory from the previous period or from the previous scenario, that automatically becomes my very first batch I still have remaining in my inventory. So as you can look on the top right corner, I have inventory for 80 items costing me $1.54 per item. I also recorded my 100 items that cost me $1.52. And then my third batch here is another $100, another 100 items at $1.56. Okay? And again, from the scenario, we understand that now ending inventory is 60, right? We were given this, right? Someone went down to the basement and told you you only have 60 items left available. And you're going to take that and you're going to solve for the cost of goods sold. If you have 280 items available to sell and you tell me you only have 60 left, your conclusion is you sold 220 items. Okay? And by understanding that, if I were to solve for either or, I can go ahead and solve for how much my cost of goods sold. So in this case, I sold a total of 220 items. I can go ahead and look at my inventory items and recognize that I need to get rid of my first batch, which is the batch that is in actual inventory. So in this case, I'm going to sell out my first batch of 80 for $123.20. Knowing this, now I got rid of 80, I still have 140 left. And then I'm going to go ahead and dip into the second batch, which we know if we take out the full 100, it's going to be 100 for $152. And then we know that we have 40 items remaining. We're going to dip into the third batch and we're going to calculate it per unit rate. Cost per item. I need to change that. Cost per item. That's going to give us $1.56, which gives us a grand total of $62.40. And if I add up all of those totals, I get a total of 220, which is my end goal, that I sold 220 items. And it's going to cost me for a grand total of $337.60. Okay? And I'd be able to solve for ending inventory by subtracting from the goods available. Okay? So any questions in regards to how I calculated this? It's a lot of information, and everything I rambled on about may not make sense now, but when we apply it, it will make a lot of sense. Yes, no questions? Yes, questions? No questions?
No questions from my end.
Okay. All right. So, again, we reach the end of our period. So therefore, we need to make another conversion entry. But this time, what we have is we have beginning inventory. Okay? And what you do with that beginning inventory is, since we are selling it out, we need to make sure that we journalize it on the credit side. Why? Because we have beginning inventory, we need to include that with your total purchases and your total freight expense. So understand it that way. You need to add your beginning inventory as a credit, right? Because your ending inventory ultimately is going to be the 60 items that you have currently in your inventory. And what you're going to do is once you solve for it in your inventory worksheet, journalizing it and copying it down is the easy part. Okay, so here we recognize what our total ending inventory is. Here we recognize our total cost of goods sold. And then here we recognize our total purchase expense, our total freight expense, and we also indicate our beginning inventory. Okay? And if we add these all up together, they are equal on both sides. Okay? So that is what conversion entry is. All right? Chapter review. So again, when we're looking at periodic inventory, every time we make a purchase, you're going to recognize as a purchase expense and freight expense. Okay? The second thing I want you to know is the conversion entry, which is you're going to have your ending inventory, your cost of goods sold, and then you're going to journalize your purchase expense and your freight expense as a credit. Okay? All right, and the cost of methods that you have available is going to be FIFO, LIFO, and weighted average. But today, all we learned was FIFO. All right, and that's pretty much it as far as the journalizing portion. But the actual calculation is something I cannot technically have a review for, because it is ultimately understanding what the question is asking at hand and how to calculate it. So first in, first out, meaning you're going to get rid of the first items that you purchase, all right? And that's what we're going to be focusing on. Any questions in regards to anything that we've learned for first in, first out?
No, ma'am.
Okay. So I'm gonna go ahead and stop here